Welcome everyone to Sunday Scoop. My name is PSK. Today is Sunday, February 13th, 2022, and it is Super Bowl Sunday. So I wanted to get the video out and available for everyone so that you can enjoy the game tonight if you're in the US or you enjoy watching the Super Bowl, as well as just we got a ton going on in the market as far as macro headlines, news, catalyst, volatility. So let's jump right into it. Real quick disclaimer, this video is for educational, informational purposes only. This is not any advice or buy, sell recommendations. Please do your own due diligence. Let's jump into the market. So this week we actually have a really packed week of popular big names that people love to trade, have been in the news. You see them all over FinTwit. We got RBLX, UPST, Airbnb, Shopify, TTD, NVIDIA, AMAT, Roku, PLTR, Walmart, Fiverr, John Deere, Dropbox, Sunrun, Yeti. I mean, just ton of big names this week that have been very popular, been part of that 2020 rip. As far as some of these big growth names just getting hit over the head. Some of these are down 50% or more from their highs. Some are down 80+% from their highs. So despite everything else going on in the markets, we do have some really interesting earnings. The question will be after these report, do they continue to get sold off or can they start to recover? That's kind of what I'm watching for. And, obviously NVIDIA is going to be a big one. It could impact the rest of semis and what the market does overall on Wednesday night, as well as, we'll see what happens with Russia and Ukraine. But a lot of notable earnings this week. As far as IPOs, just a couple lockup expirations. Facebook is going to be having a big all hands on deck, they're calling it, metaverse vision that Zuckerberg is going to be rolling out. He wants to make sure, I guess, all of the employees at Facebook are on the same page, Meta platforms now. So that should be this week. I'm sure we'll get lots of headlines out. I believe that's on the 15th. So Tuesday, I'm sure we're going to get lots of headlines out about that, as well as this week, Intel CEO will be hosting a presentation on their business strategy. Couple M&A deals. We have the Xilinx AMD deal closing this week. We find out if Oracle and Cerner is going to happen or not this week. And then also just as far as the macro calendar, on top of the data that we have Bullard is actually speaking. And obviously he's been pretty hawkish. If you were trading in the markets on Thursday, his hawkish comments after we got the big CPI number in the pre-market, he came on and presented throughout the day through numerous outlets where he's talking about he's all in favor for a half-point rate hike in March and then continued rate hikes after that. So he's got a very hawkish stance on rate hikes, talking about 6+ maybe. And so he's speaking Monday morning. I'm sure he's not going to change his tone. I wouldn't expect anything else unless the Powell or the rest of the committee have really got to him and said, listen, you need to settle it down a little bit. We'll see if he changes his tone at all, but he's been very hawkish. The markets haven't reacted well to his comments. Anytime he starts to speak, it seems like the market starts to sell off. So he's speaking on Monday and then he's speaking again on Thursday. So that we know of, on top of any other interviews he may or may not do. We have PPI out on Tuesday morning, along with some retail sales numbers on Wednesday. The Fomc Minutes will be released from the last meeting, which has been a catalyst event. This should, in my opinion, be a non-event. The minutes, because Powell has a presser after every FOMC meeting, the minutes are kind of you would think they're meaningless, right? We already know everything that's in them. He's already said it. But what has happened is the minutes have come out. We've gotten more details. Powell doesn't share everything, but we've seen a little more clarity as far as how the members are thinking and voting, and the market has reacted to it. So keep it, Monday there's a Fed, Wednesday there's a Fed, Thursday there's a Fed. So we'll see what happens, as well as there's more speakers throughout the week. So on top of that, we have Russia, Ukraine, and everything else going on in the market. So there is a lot of headwinds for the market this week. Stay nimble. And I'm going to talk about some strategies here in a second that I've been doing. As far as the kind of a recap on the ETFs for the week, as has been going, crude has been, obviously really strong. Anything energy, gas, oil related has been strong to the upside. One thing that we did see take off on the commodity side was silver and gold shot to the upside Friday off of the Putin news. But what's kind of notable to me here is XBI. XBI has been getting just clobbered for the past year. It actually closed the week up 2.8%. So something to keep an eye on. Maybe bios are starting to find a base. Maybe bios start to catch up a little bit here and stop lagging so much. So keep an eye on XBI. If it can have back-to-back weeks of green, maybe this is the start of kind of breaking the downtrend, recovering to the upside. So keep an eye on bios. But other than that, I think another thing to watch this week is going to be the semis, the SMH and the SOX. They are back below the 200-day. These names really got hit hard in the sell-off, which to me tells me that people are, not only is it considered a high beta sector, it trades with the markets, but people are really exposed in these areas. The XLI, to me, this is the monthly chart. It still looks like it could come back down and test the bottom of this broadening range. So I would look for some weakness in some of these. Like for example, I think FedEx, UPS are in these, as well as, you have Caterpillar, Cummins, Deere, things like that. These industrials could see a little bit of weakness here if the market does break down. So I did note that we have claimed a new chart pattern here. It's called the Bullard engulfing candle followed by the Putin soldier. So anybody who's a candlestick pattern fan knows that, we have bearish engulfing, we have the white soldiers, we have the three black crows, things like that. But this is a new chart pattern. We had a very bearish engulfing day off CPI and Bullard comments, followed by a heavy sell-off in the markets with the Putin, Russia-Ukraine news about going to war. So war is not good for the markets. As far as the broader markets go, it's you'll see an uptick in aerospace and defense names, gold, energy, gas. You'll see those names shoot up because they're all about supply, demand, things like that, risk. But as far as the NASDAQ goes, just as the NASDAQ was trying to reclaim the 200-day, it had a really strong day on Wednesday. Tuesday was kind of trying to break the uptrend to the upside, gapped up overnight, and then ripped just from the open, and then just continued upward all day. No real pullback, just solid strength right into the 200-day, into the close. And then obviously we had all the data come out, the CPI data come out, the small little push that was making pre-market. As soon as the CPI data hit, it just tanked. We reversed right at the open all the way back to flat, and then Bullard comments came out and we sold off. Gold is breaking the weekly downtrend to the upside. I'm still a non-believer personally on gold. Every time gold has tried to rally, it's just continued to fail. 1, 2, 3, 4, 5, 6 times now. So maybe this is the time where it will break out. We'll see if it can hold. If Putin does pull back or we don't go to war and gold rolls over, then I wouldn't be surprised by that move at all. So if you're long gold, just make sure you have stops in it. Make sure you know where your exit plan is. Until it can continue to hold. To me, home builders still look weak. You still have DHI, BLDR, Home Depot, Lowe's. All these names still look heavy to me. A high interest rate, high inflation market is not great for home builders. These names have been so strong the last 2 years. It wouldn't be surprised to see these roll over and some money rotate out of those names. And then banks, keep an eye on banks. If we lose banks, JPM could not reclaim the 200-day. Even Morgan Stanley, which is the strongest of the banks, saw some weakness the last couple of days. If banks roll over this week and tech it continues to see weakness, semis continue to see weakness, the market's going to feel pain. Energy is not heavily weighted enough. There's not enough value out there to hold the market up. If you look at the way that the SPY and the Qs are weighted, tech is such a big portion of that. And then you add in financials on top of that, and maybe even some healthcare. I mean, that's well over 50% of the market weighting alone. So that's something to keep an eye on as far as those names go. As far as the charts go, I just wanted to talk about what I've been doing in these big volatility swings. In my opinion, it has been more beneficial to trade the actual indexes, the SPY, the QQQ, even the IWM has been a nice one to trade because of the range. When you start getting big bouts of volatility, you get big macro headlines, you get big swings, high to low intraday, the average true range is changing on the market because of all this volatility in the headlines. It is so much easier and so much less risk, in my opinion, to trade the actual indexes than try to identify and pick an individual name. And the reason I bring this up is because Amazon is a great example of this. On Friday, Amazon, when that headline started to come out on Amazon or on the markets about Putin, Amazon was already in a downtrend. It was already selling off all day. But when the headline came, Amazon never really fell apart like everybody thought it would. Everybody thought like, okay, hey, I'm going to short Amazon because this thing can drop 100 points. But Amazon only dropped about 40 points. It ended up being down over 100 points on the day, but 60 of that happened just normally throughout the morning session. Versus if you were following something like Tesla, which I was trading a lot of, had relative weakness all day and then continued aggressively to the downside in the sell-off. This was one name that was worth playing. But outside of that, it was more advantageous to just play the indexes than it was to try to figure out which stock was going to sell off more than another one, because not everything sold off equally. And Amazon is a great example of that. Look how choppy Apple was. You know, Apple didn't even really sell off that aggressively. It did off the initial headline, but after that, it was really choppy in the afternoon. So in one way you can avoid the chop, the semis got hit the hardest on the sell-off, in my opinion. If you're talking about individual sectors, individual names, the semis saw the majority of the weakness. But if you're looking to try to avoid stock picking and just trade the best when it comes to headlines, like if we get more Putin headlines, if we don't go to war and Russia backs down and the market rips to the upside, I'm not going to be focused so much on trying to trade individual names, but rather just trade the indexes, the SPY, the QQQ. It's a way, because of how the VIX works, especially. If the VIX is going to be rolling over or ripping to the upside, it's going to create volatility. It's going to increase, especially if you're an option player, it's going to increase the premiums. So instead of trying to pick a stock that may just go sideways or chop around or even hold up, it's better to, in my opinion, to just trade the actual indexes versus trying to pick a specific stock. Unless it's something high beta like the semis, which saw some big volatile swings off every headline. Now, I think the VIX is something to keep an eye on. I think if the VIX starts spiking over 30, we get more headlines. The VIX could definitely rip back towards 40 if we see continued weakness. The NASDAQ and the S&P are now both back below the 200-day. I would take it day by day. If you're a day trader, if you're a short-term trader, there's no reason to carry huge positions overnight. If anything, overnight, just continue to trade what you've been seeing intraday. And if I think the two things to keep an eye on this week are going to be the Russia-Ukraine situation. If that fizzles out, the market could catch a really nice bounce, especially the S&P over the Qs to the upside. The market was pretty bullish until we got those, and then we'll see what happens post FOMC minutes. The other thing to keep an eye on, I think, is going to be Bitcoin. You know, Bitcoin rallied back into the 200-day, got rejected, but it's still holding up well. If Bitcoin rolls over, I think that will mean that the market's going to be a little more risk off. Tech names could get hit again. But if Bitcoin holds up and actually tries to retest the 200-day, you know, the market could catch a bounce. So, you know, try to keep an open mind. Try not to just use, you know, look for little things in the market. Create a checklist. Look for little things to watch. You know, watch the VIX, watch Bitcoin, watch gold. You know, you could even watch crude. Some like to watch the TLT Treasury to see if this gives any kind of indications. But there's little signals you can always look for, because rates are not always going to be your decision or an indicator. For example, you know, the 10-year, everybody keeps talking about the 10-year, but the 10-year pulled back and the market pulled back. So there's not always a direct correlation between rates and the market. So keep an eye on that stuff. We'll see what happens overnight here with the night session. I'm going to be personally watching the Super Bowl. I'm not so worried about what the market does overnight. But also keep an open mind that, you know, if we don't get any more negative headlines, there's not a guarantee the market is going to continue to sell off. If things escalate and we do go to war, there will be more downside in the market short term. But don't just come in tomorrow, in my opinion, just thinking you're gonna go all in short on everything and the market's gonna go down. Could it go down? Yeah, we could definitely go down and come back and retest these lows. We could come back into 42.71 area. Is it a guarantee? No, nothing's a guarantee in this market. I think you just need to be open-minded. You know, if things don't escalate between Russia and Ukraine, and you know, Putin is doing this just to get some global clout within the leadership group, and he ends up just backing down, then the market will bounce. You know, this stuff got hit pretty hard off that Putin headline. So if that changes, you're going to see a nice reversal off it. So just keep an open mind and just focus on trading what you see. I can't say that enough. So many people are trying to predict or anticipate what's coming next. Instead, just look at the chart and say, what is the chart telling me? What do I see? Trade what you see. Try not to overthink it. Try not to anticipate or predict. You know, the more experienced trader you are, the more you've seen these situations play out, the more you've seen price action act a certain way, you can start to expect that this is going to happen, but you still have to wait for confirmation. And then in the end of the day, regardless of what you think is going to happen, you have to trade what you see. So that's kind of my focus for the week. I'm not going to dive into a bunch of individual names, because honestly, my focus is going to be the indexes to start off, because a lot of these things are going to trade with the index, regardless of if it's tech or semis or growth, you know, high growth, as well as some of these earnings names. So hope this video helps, and leave any comments, questions below. Hope you guys have a great week. I think it is option expiration week. So you know, I expect some volatility. There will be some premium burn. Not everything's going to move if you're an option player, but you know, try to stay nimble. Pay attention to those headlines. Look for your cues in the market, and let's have a great week. So take care.